Welcome to Shortview Trading. This is your morning market hit for Tuesday the 3rd of March. What matters today for traders? Well, of course, markets moved pretty sharply yesterday, snapping back from their losses over prior trading sessions, mostly closing 4 or 5% higher in the States on the session. That leaves 1 to 2 week traders with a key question: how enduring will this relief rally be, or is it simply a one-day affair? And of course, there are various signposts we can use to help gauge that. Firstly, look at the models. The models retain very strong, clear, across-the-board comprehensive buy signals, even strong buy signals. We're showing you now, for example, the short-term put-to-call ratio, which remains very much on strong buy even after yesterday's strength in the S&P 500. Equally, another model, steepness of the volatility curve, shows markets are still very fearfully priced, with that model retaining its strong buy message as well. A second key signpost is really the typical duration of relief rallies and snapback rallies, and a cursory glance over the last couple of years shows that most snapback relief rallies last 2 to 5 trading sessions as a minimum. Over and above that, it could of course evolve into a more enduring resumption of the bull market type rally. Then the third key signpost is the Fibonacci charts, with most retracements from pullbacks typically getting you up to 61% retracement of losses, or indeed more. If that occurs, there's still considerable upside in the S&P, NASDAQ, and other key indices. Over and above all those factors, of course, policymakers are at work, and once policymakers get to work supporting the economy and markets, rallies can be really quite enduring and persist for good periods of time. For full details, for 1 to 2 week trading ideas on how we're approaching this market environment, please see today's daily rag, available to subscribers and on the website. So what are we watching today? Plenty going on. There's lots of little bits and pieces of macro coming out, albeit none of it's particularly key. Eurozone inflation's interesting. US vehicle sales and US New York ISM are also interesting, albeit none of it's really key. There's also a number of central bank speakers, including Carney this morning, and a number of Fed governors speaking over the course of the day. But what we're most focused on is the G7 conference call between finance ministers and central bankers from the G7 countries, which is occurring at 7 a.m. Eastern Time, 12 noon London time. The press release after that will be key and important for markets. That was your morning market hit for Tuesday the 3rd of March. Thank you for listening. Please do subscribe on Twitter, LinkedIn, Facebook, and or YouTube. Thank you.